Hello, hello, and welcome to the walkthrough video for premiums. We are going to be looking at brief exercise 13.15. There is really more than one way to set a problem like this up. So if the setup that I'm using right now is not the one that you prefer, then you can definitely use this setup that we saw in the PowerPoint slides. You can use this setup in the book, and even in the answer key to the homework solutions, once I make that available for you, that setup is a bit different as well. But whatever format makes it easiest for you to understand how to record this estimated premium liability, that's the one I want you to use. So in this problem, we are going to look at when premiums are redeemed and the entry for the estimated premium liability. Of course, I'm changing the problem a bit because they didn't ask me to do the entry for redemptions, but I can almost guarantee that you're going to see an entry for redemptions again at some point in the future. So let's take a look at brief exercise 15.15. This time we have Win Company offering a set of building blocks to customers who send in 3 UPC codes from Win cereal along with 50 cents. So right now the company offers these building blocks, but they're not going to give it to their customers for free. The customer has to send in 3 codes, 3 UPC codes, as well as 50 cents. The block set costs Win $1.10 each to purchase and 60 cents to mail. So this block set, when the company buys it, this is premium inventory. Remember that you learned way back when in accounting 1, the shipping costs and all that stuff get included in the inventory. But here the key thing is that I need to keep track of how much it costs me to send the goods to the customer, as well as how much it costs me to get the goods, the premium inventory. So keep those two numbers in mind, that $1.10 and that 60 cents. So during 2020, Win sold 1.2 million boxes of cereal. The company expects 30% of the UPC codes to be sent in. During 2020, 120,000 UPC codes were redeemed, and we need to prepare Win's December 31st, 2020 adjusting entry. So we're going to do the adjusting entry first, and then we'll do the entry for the redemption. In the real world, we're probably doing the entry for the redemption first, and then the entry for the adjusting entry next. But I just want to make sure that I'm not losing you. You're not looking at this saying, well, what is she doing again? We're following the book, and then I'm adding in redemptions so that you can understand that piece of it. So to do the entry, the adjusting entry on December 31st, we have to first do some calculations because the number of boxes sold is not equal to the number of building block sets we're going to send out. And that is because we require that the customer gives us 3 UPC codes. And not only that, not everybody is going to take advantage of this offer. So we have to estimate what percentage of our sales will actually be redeemed in terms of this building block set. And that building block set is essentially my premium. That's why we call it a premium. It's something nice that we're giving to customers. So first, let's find the amount that is expected to be redeemed in terms of UPC codes. So we have 1.2 million boxes that were sold, and each box represents 1 code. We expect that we are going to have 30% of those redeemed. So that is 360,000 codes to be redeemed. Now, that is just an estimate. Because we are doing the entry for the estimated premium liability, I can't include this whole 360,000 codes because I have a certain amount that were actually redeemed this year. In the adjusting entry, I'm worried about what I haven't redeemed, but what I expect to redeem. So I need to subtract out what was redeemed this year. I'm spelling it wrong because I have multiple words floating around in my head. I want to call it redemption. Redemptions, or what has been redeemed this year. And the problem told me that we had 120,000 codes redeemed this year. So that means I need to create a liability for 240,000. Where did I get 180 from? Can't subtract. I need to create a premium liability for the 240,000 codes that will be redeemed next year. So we'll call that next year's expected redemptions. Now, 240,000 codes does not equate to 240,000 building block sets, because each customer is required to send in 3 codes to get 1 building block set. So we have to divide this 240,000 by 3. So that's 3 codes per customer, giving us 80,000 building blocks. Now, let me pause for a second and let me recap just to make sure I haven't lost anybody, because I can understand the frustration with that. And also I can solidify that you know where we're going. We're trying to determine the total estimated premium liability for next year so that we can do the adjusting entry. The company has sold 1.2 million boxes, which equates to 1.2 million UPC codes. There's 1 code per box. The company has estimated that 30% of this 1.2 million will be redeemed. So we're expecting 360,000 codes to be redeemed over a couple of years. The issue is that we have 120,000 that have already been redeemed. I don't need to include them in my adjusting entry because I will have already recorded them. And I'll do that entry for you in a second. So we subtract out the amount that was redeemed this year. And that leaves us with the estimated number of UPC codes that we expect to redeem next year. That's what we're doing our adjusting entry for. But 1 code does not equate to 1 premium or 1 building block set. We were told that the customer has to send in 3 codes and 50 cents in order to get a building block set. So we had to divide this to determine the total number of building block sets that we expect to be redeemed in the next year. Now, with all of this, we still haven't gotten to any dollars yet. All of this is in terms of building block sets at this point. First UPC codes, then we converted them to building block sets. Now let's convert this to money, because when I do the entry, I can't record a building block set without a dollar value. To find the dollar value of this estimated premium liability, we're going to take the 80,000 building block sets and we're going to multiply it times our cost minus the money that the customer gives to us. So our cost, if you remember, was $1.10. It cost us $1.10 to get each building block set. It also cost us 60 cents to mail it to the customer. So we add in the 0.60. But this is not the full cost of this premium, because we asked the customer to send us 50 cents. It could be, we could label that as shipping and handling because we want to defray the cost of shipping, or we can just require them to send us $1 if we wanted to. But in this example, we're requiring them to send us 50 cents to offset a portion of this cost. So we subtract out what the customer is giving us. So our cost minus what the customer is giving us. When we multiply all of this out, this is going to give us the value of our premium expense and premium liability. So after we do our math here, 80,000, it ends up being 96,000. This entry, this adjusting entry, is an accrued expense. That means we're debiting some type of expense and crediting some type of liability. Now, I know it's a ton of work to come up with this number here. So if you get to a test or you get to a problem, at least get the journal entry part right, where you debit the expense and credit the liability. We debit premium expense and we credit premium liability for this 96,000. Now, I want to keep this up here, and I don't know if I can, but I want to keep this up here because I want you to see the entry for the redemption. This is the entry for the estimated premium liability. My total premium expense will represent the entire 360,000 codes that will be redeemed. But a piece of it I'll record as redemptions, and the other piece is recorded as the estimated premium liability. So let's see what we would do for the redemptions. Now keep in mind that we had 120,000 redemptions. 120,000 redemptions does not equate to 120,000 building block sets. We have to take this 120,000 and divide it by 3. So we're going to take, let's see, I think that I can erase this part. And hopefully I won't lose you. But I want to keep that adjusting entry there so that you can see it. So for the redemptions, we're going to take the 120,000 and we divide that by 3, and we can determine that that equals 40,000 building block sets. Now we need to assign a dollar value to those 40,000 building block sets. And we do that by using the same formula down here, where we take the 40,000 and we multiply it times the cost to us. Each building block set costs $1.10. It costs us 60 cents to mail it, but the customer is going to give us 50 cents. Now, when we do all of that math, that is where we come out to, and make sure I have the right number here. $48,000. Now, that $48,000, it would help if I put a dollar sign here, is a portion of my entry. So let's start working on the entry here. So in the entry, I know that I need to debit premium expense for $48,000. I also know that I'm handing over building block sets. In the actual adjusting entry, I'm not giving anybody anything. I'm just estimating the liability. But in the redemption entry, I'm actually giving out building block sets. When I originally bought those building block sets, I debited premium inventory and I credited cash. When I hand them out to my customer, that means I'm getting rid of them, so I need to credit premium inventory. Now, I may record the shipping separately, but for the purposes of this example, we're going to include all of our costs. And the reason why it takes us the 60 cents that we're adding in here, the reason why we're adding that in is because the premium inventory in this example represents all of the costs that it takes us to get the goods to the customer in this particular situation. So that's the $1.10 plus the 60 times the 40,000. So when we do that math, we end up getting 68,000. And hopefully you guys are checking my math. 40,000 times $1.70. Yep, we get 68,000. Now, notice that the entry does not balance. What am I missing? Well, the customer gives us 50 cents in cash for each one of these building block sets. So I also need to debit cash for 50 cents times 40,000. And that's where the 20,000 comes from. So let me put a little star or a little parentheses right here so you can know where this number came from. That is the 40,000 times the 1.10 plus the 0.6. And for this one right here, that is the 40,000 times the 50 cents, or what the customer gives us. So when the premiums are redeemed, we have to deal with the fact that we're handing out inventory and it's costing us some shipping here. And we also have to deal with the fact that the customer is giving us some money. So we end up debiting cash for the 40,000 times the 50 cents per building block set. Now, here is the reason why I did this. And I did it this way because I want you to keep in mind that for this year, we said we were going to sell a total of 1.2, or we sold a total of 1.2 million boxes of cereal. And each box represents a UPC code. Of that 1.2 million, 30% would be redeemed. I need to record a total premium expense that represents that total redemption there. So let me draw a T account for premium expense so that I can show you what I'm talking about. The premium expense for the entire year gets recorded in pieces. There's a redemption, and then there is the estimation of redemptions in the future. So I have the 48,000 plus the 96,000. Let's see if I can add to that. 4, 1. So the total premium expense is 154,000. Let's confirm whether or not that is correct by taking that 1.2 million times 30% that we started off with, and that was 360,000. And I'm going to draw this here just because this is my little check. It's not required. Just want to make sure I'm on the right track. And I'm going to multiply. I'm going to take that 360,000, and then I'm going to divide it by 3. $130,000. And I am 120,000. I don't know how to divide. 6 divided by 3 is 2. 120,000. That 120,000 will then need to be plugged into this equation. So the 120,000 times the 110 plus the 60 minus the 50. Why am I doing this? Again, I'm double checking to make sure that the total premium expense has been reflected by recording the redemptions and the estimated liability. So when I do all of this math here, that I should come up to 154,000. Notice that there were 120,000 total building block sets that I was supposed to be handing out. I actually handed out 40, and I'm estimating that I would hand out 80. 40 plus 80, 120. I'm saying that my total premium expense. Once I take into consideration what I have to pay out versus what the customer has to pay to me. Let me close my curtain here so that you guys can see that without a glare. See if that makes that any better for you. Makes it darker. Makes it a little bit better. So my total should be made up of what was actually redeemed, so 48, plus the liability, 96. So as you are looking at, let me open my curtain again because it's too dark. As you are looking at premiums, there are really three big entries that you'll be asked to do. You'll be asked to do that, well, four technically, because sometimes you'll be asked to do the entry for the sale, the actual sale that occurs. You'll be asked to do the entry for the purchase of the premium liability, the premium inventory, excuse me. So in that case, you're just debiting premium inventory and crediting cash, just like buying any other inventory. Then you'll be asked to do the entry for the redemption. That's here where we record a piece of premium expense. We show the cash coming in from the customer, and we show the fact that we are handing out this premium inventory. And you're also asked to record the entry for the adjusting entry for the estimated premium liability. Now, in some situations, it gets a little bit iffy when you're dealing with shipping costs. Sometimes that gets added to inventory. Sometimes it washes with cash. But just to make things simple for you, I take all of the costs that we have to pay out and I plump them or plop them into premium inventory, because more than likely we're including that 60 cents there because it cost us 60 cents to get it to us, and that's what we're turning around and charging the customer. And then we may ask them for an additional amount because it may cost us a little bit more than that 60 cents, but typically that's us trying to recoup what we had to pay initially, and that's why I dump it all into premium inventory. And then I record the cash coming in. So again, if you don't like this format, take a look at the answer key once we get beyond the problems in this chapter. Also take a look at the format that is in the book as well. And when we get closer to the exam and you look at the review, you'll get to see possibly another format that may make a little more sense to you. But whatever format works for you, as long as you arrive at the entry for the redemption and the entry for the adjusting entry for the estimated premium liability, you're good to go. I so appreciate your time and attention. I hope you have a wonderful day.